This is Jitan here and welcome to TradersTV. In today's video, we're going to be continuing the stock market theme and we're going to be looking at the US 30, otherwise known as the Dow Jones Stock Exchange. We're going to be looking about what it is, how it's constructed and why traders use it. So let's begin.
So what is the US 30? Well, the US 30 is more commonly known as the Dow Jones 30, which represents the Dow Jones Industrial Average, or DJIA as its ticker, or simply just the Dow. It's a widely represented and talked about index amongst financial media like Bloomberg, CNBC, and different newspapers all around the world. The index consists of 30 different stocks in the United States based on the sum of the price of one stock. So it's a little bit different to other indexes which are based on market capitalization. This index is actually based on the price of the actual stock. It's actually one of the oldest indexes in the world, first devised by Charles Dow back in 1896. And the reason there's only 30 stocks in the index is partly because back in those days, Dow calculated everything by hand. So you can see why other indexes like the S&P 500 would have taken quite some time back in 1996. The US 30 consists of companies such as Nike, IBM, JP Morgan, ExxonMobil, Walmart, Disney, and of course many more. So a lot of household names that many people know about. So let's have a look at the index on Smarcharts. So here is a chart of the US 30 on the Smarcharts platform, and as you can see, it works very similarly to other different markets where we've had periods of market moving up, moving sideways and moving down. Now, for a lot of traders, many people out there use a variety of different strategies on the indices. Some are very short term, looking to trade lower time frames like the 1 hour or 4 hour chart. Okay, this is an example for 1 hour chart. So every bar represents 1 hour's worth of trading. Okay, and there are also other traders who only focus on the higher time frames like the daily chart. So 1 bar represents 1 day's worth of trading. There are some who will look at the weekly chart. So there are multiple time frames you could potentially be trading, and each comes with its own pros and cons. Okay, that's because there is no one time frame better than the other. They each have risks associated to them. Now, this is the US 30 index. Now, as you can see on the left-hand side, there are quite a few other indices that you could potentially be looking at as well. So within the US market, we have the US 30, the S&P 500, and the Nasdaq 100. We also have Asian markets like the Hang Seng 50, the HK50, or the Japan 225, which is the Nikkei. We also have European indices as well, which is the France 40, German 30, UK 100, and even the Spanish 35. So there's a variety of different global indices that are available to traders.
So now you know a little bit more about the American stock market, you may be interested to learn more about the different types of markets that are available. If you want to learn a little bit more about Learn to Trade and who we are, then click on the link below. Thanks for watching, and I'll see you next time.